So I think it would help if we got a bit clearer on, if you like, difference between VAT and GST in some sort of theoretical context. VAT, you're concerned that the employer, the producer, the owner of the firm, is not paying a double tax in that he sells the goods on at his price plus the VAT. If in his costs he's already paid GST on especially the goods he buys for the production of whatever he's producing, and he's paying GST on the total price of the good that he's going to receive, then in some sense he's paying some doubling up. So he claims back the GST on the goods that he's used as inputs so that this doesn't happen. However, I might point out, when it came to wages, he had to pay the wage that the employee gets, plus any other taxes he has to pay on employing people in the production process. So really he's doubling up there, he's paying both. He's having to cover both. If on the other hand we don't have a VAT tax, and we don't have income tax, we just have a consumption tax, which I don't think I would really safely call it goods and services, because I'm defining it very specifically to be consumption of goods and services. Yes, he pays goods and service tax on what he sells in total, but he hasn't personally consumed the inputs that he paid goods and service tax on, that he bought from the economy. So he claims that back. It was part of his production process. So it's the same reasoning going on. And so, he and the tax man will fight over whether he does need 10 Rolls Royces for his marketing, and really the tax man should be able to question why he has got such high social expenses in entertaining clients and going to conferences, on the grounds that really such is not required for the production and sale of your product and service. It is actually massive perks of being in the business, and it's a hidden way of consumption, therefore, which he should be taxed on when it comes to his personal consumption. And therefore he can't claim back all the GST on the 10 Rolls Royces and the extravagant hotel bills and, conferences in Bali instead of in the East End of London. Well, probably settle for what we do at present, which is it's up to him if he decides the firm's going to pay out these enormous expenses, and he can get the GST back for such expenses. But you see what I mean? You probably say then, well, there's no difference, Marshall, then which phrase you use, VAT or GST. And in fact, you'll notice that in my recording, I actually, slip of the tongue, I said GST early on instead of VAT. But to say, of course, that if we really are taxing consumption of goods and services, then we do not want to tax, for instance, capital gains. And we don't wish to tax rates, except in a very backhanded way. We do think that we want to tax what you consumed in this year. Now, you didn't consume the whole value of your house that you bought this year. You only consumed the service you received from it, which is imputed to be the return on what the market value of your house is during the year. Or for simplicity, at a certain date in the year, like the end of it, or the beginning of it, or the lowest price during the year, or the highest price, or some average, etc., etc. But you can haggle over the details of your system. So, taxman may look at it and say, well, I think you've driven at least one of these Rolls Royces, and these expenses were your expenses when you went on the conference, and they look to be at least 50% higher than they needed to be, so I'm imputing that is a consumption to you, not a necessary cost of the business. I don't know. I think it's probably easier to dismiss that as peanuts compared to... well, on the other hand, it's not. If he's keeping a few palaces and he's charging all the costs of running the palaces to the business because he works at home, Oh, really? Let the war continue. But I don't want doubling up. I don't want profit tax and your actual consumption of goods and services to be taxed. That's double taxing. And I don't want capital gains in there as well as rates. And I don't want rates as well as the consumption tax. I want tax to be on your level of consumption. And that means you might be earning terrific profits and stacking it away. Okay, and it does, I agree, give you this wealth. But when you actually come to spending the wealth, we tax you. If you spend the wealth in this country, now we've got a problem. Are you spending the money on goods and services abroad? Or did you build up tremendous wealth and then sell your assets and move abroad with the assets, with the value? In which case you made all the value here and you consume it abroad in some sense. Massive loophole in the system. What do we do about that? It's very simple. We charge the consumption tax on anything you take out of the country because it's potentially going to be consumed by you. And you made it in the country. Replies the wealth holder, but I brought some wealth in. For argument's sake, I had 10 million of what I'm taking out now. Well, that's okay. We'll allow you the 10 million as a stock, so to speak, that you can spend up to abroad. But once you've spent that amount out of the economy into some other country's economy, the rest is all subject to the consumption tax. Well, as with all tax systems, you immediately think, hang on, is there a way around this? The cunning entrepreneur. What's he going to do? I'm not sure at the minute. What do you think? I don't want to go into further detail in a minute, but thank you, Heavenly Dad.